Today we'll be discussing green energy credits that are available through the Inflation Reduction Act. And as always, this is not individual tax advice. Your situation is going to be unique. So if you plan to purchase any of the qualified products, you definitely want to consult with your tax professional to make sure that it does qualify and make sure that the products that you're purchasing meet the energy standard requirement to qualify for any tax credits. First thing we're going to discuss is home efficiency improvement credits. First of all, what type of property does this qualify for? It has to be an existing home, so you cannot get a credit on a new construction. Must be located in the United States. It must be your primary residence, and you cannot use more than 20% of that residence for business. So if you have like a home salon and it's 10% of the square footage, this is okay. But if you are doing like shipping out of your home and you have a warehouse there that's like half the size of the house, it's not going to qualify that way. Energy efficient home improvement credits are one particular part of kind of a twofold crediting system. So this is going to basically be improving the existing structure of your house. So it's going to be replacing doors, windows, skylights, insulation, large appliances, which would be, the air conditioner, water heater, furnace. Biomass stoves is what is referred in the IRS code around here. You'll probably hear them being called pellet stoves. And then electrical upgrades, so improvement on your panel, going from fuses to breakers, upgrading to a 200 amp service. Those things are going to be eligible as well. The credit that's available is going to be 30% of the cost of the project. In general, each project is going to have a $600 credit max. And then annually, there's a $1,200 max. With the exception of a new heat pump or a new biomass heating system, there is a $2,000 credit that's available for those two projects. You may also hear about home energy audit qualification for tax credit. The maximum credit that you can receive is $150. I will say this has to be performed by a licensed professional. The fee that will be charged to have a home energy audit will probably be as much as $150 or maybe even more. So I don't think this is going to be a very advantageous credit, but it does exist. There is no lifetime limit on this. So if you spread out multiple projects, you can hit that $1,200 annual max multiple times while this program is available going forward. If you receive rebates from the manufacturer, you buy windows and they charge you $5,000 for the windows, but they give you $2,000 back, then it's going to be a $3,000 window that you'll be including as the price. If you're in a state that has credits, those are not deducted. So that's a separate incentive program. If you're in Illinois, California, Hawaii, there are a number of states that have that. Wisconsin currently does not have any additional credits. Must meet the Energy Star guidelines, and if you don't use the entire credit in the tax year that you file, the credit can be carried forward. So the other part of that twofold residential is the clean energy credit. And this is going to be how you basically receive power to your home. So if you have solar panels installed, have a wind harnessing windmill of some sort, geothermal, solar powered components. So if you have a water heater that's solar powered, or attic vents that are solar powered, those types of things, those are going to qualify under this credit as well. And if you have backup fuel cells or battery storage installed on your home, those projects will also qualify. So between now and 2032, 30% of your project, including the professional labor, is able to be refunded in the form of a credit with no lifetime limit and no annual limit. Now I put professional labor in there because if you install solar panels on your own roof, you do not get to include your own work, your own labor. It has to be something that you paid to a licensed professional. Those credits do exist beyond 2032, but they do go down in 2033 and down in 2034. Obviously, laws are subject to change. Those may be extended, they may be increased, they may go away sooner. Like with the other credit, rebates on the project from the manufacturer, from the company, from the installer are not going to be, you have to deduct that from your total cost. But the state credits will not be deducted. So if you're in California and there's $1,000 credit on a solar project, it costs you $30,000 to put the panels on your roof. The company that installs it gives you $10,000 back. You would put $20,000 for the project for the federal credit. And then, of course, it has to meet Energy Star guidelines, and the credits can also be carried forward. Another big topic is going to be electric vehicles. Plug-in hybrids also qualify for a number of tax credits. So how do you qualify for the electric vehicle? This one, obviously, it must be for personal use. You have to be buying it for yourself. You have to primarily drive the vehicle in the United States. And this one does have income limits. So married filing jointly cannot exceed $300,000 for your AGI. Single $150,000, and then head of household is going to be $225,000. There are a lot of different qualifications on the vehicle, specifically the battery power, how heavy the vehicle is. There's also manufacturer requirements, so it has to be a qualified manufacturer. The vehicle must undergo final assembly in North America. And then there are also mineral and battery component requirements as of this year. So you want to make sure that the vehicle meets all of those guidelines. The dealership that you purchase from also has some responsibility. If you're buying a new vehicle, it has to come from a dealership, or in the case of Tesla, where they sell them direct, that would qualify as well. But the seller is required to report the sale at the time, including the VIN number. And there are penalties if they don't do that. But unfortunately, that's it. If it doesn't happen, there's no recourse for you as of right now to receive that tax credit. So that's just one thing to keep in mind. There are limits on the MSRP for the vehicles. So $80,000 for large vehicles, vans, SUVs, and trucks, and then $55,000 for basically passenger cars. So as you can see, not eligible pointed at this beautiful Porsche Taycan for two reasons. MSRP starts at $90,000 for this car, and it's also assembled in Stuttgart, Germany, so it would not qualify for any tax credits on a new vehicle purchase. This is how the credit is broken down based on the kilowatt hours of the battery capacity. It's kind of a complicated formula. Maximum credit is going to be $7,500 total. If it was purchased before April 18th versus after April 18th, there's different qualifications. So this can be a little bit confusing. So I was looking at this and said, is there just one place that there's a list of vehicles that are eligible? And thankfully there is. So if you go to this website, the fueleconomy.gov website, it will break down what vehicles are eligible and what credit you'll be getting for making that purchase on that vehicle. So it makes it nice and easy that way. The vehicle tax credits are not refundable and cannot be carried forward. So you want to make sure that you will have enough tax or taxable income to receive the full credit in the year that you purchase the vehicle. So if you're married, filing jointly, you want to have a minimum AGI of $91,900 to receive the full $7,500 tax credit. If you're single, you want to have at least $71,100 of income, AGI income for that year to make sure that you would receive the full $7,500 credit. There are also credits available for used vehicles. So if you are buying an electric vehicle as a second owner, there might be some credit available for you as well. You cannot be the original owner. You have to be buying this from basically a dealer, because it also has to be recorded as a official sale, recorded to the IRS with the VIN number. As a person purchasing the vehicle, you can't be claimed as a dependent, and you cannot have claimed the vehicle tax in the previous 3 years. And there's also lower income maxes on this. So married filing jointly, $150,000 is the max to receive a credit on a used electric vehicle. And then you can see it cuts in half for single, and then it's about in the middle there at $112,500 per head of household. There are also price stipulations. So the vehicle has to be sold for less than $25,000 to receive the credit. It has to be at least 2 years old with 2 years of other models of the same vehicle. So as you can see, I have the arrow pointing that this one may be eligible. If you can find a used Porsche Taycan that someone is willing to part with for $25,000, that is a model 2021 or older, it would qualify because there are no requirements as to where the vehicle was built. So it's a little bit more flexible that way. There is only one secondary purchase credit on each vehicle. So basically, if you're the second owner, you may be eligible to receive the credit. If you are the third owner of this vehicle, then it would not be eligible for this credit. This also has the weight capacity and the battery power and usage capacity requirements as well. You definitely want to buy these vehicles from a dealer. They're also going to be required to record the purchase. So the IRS will be able to verify that as well. So now you've gone through everything, you've decided you want to buy an electric vehicle, but now how are you going to charge this thing? Well, if you have a home refueling station installed, basically a big plug in your garage to charge this vehicle faster, you can receive up to a 30% tax credit, maxing out at $1,000 on that plug-in on the wall as well. So that's going to be the parts and professional labor on that project as well. So there's a lot of different credits that are available. I am in no way advocating that you go purchase any of these products. This is more informational. If you plan on upgrading anything in your home, or if you want to switch to an electric vehicle or a plug-in hybrid, this is just how it works. Again, you are probably not saving money in the short term. You might be in the long term. I haven't done the math on that. So totally a personal decision, but if that's a decision that you want to make, I want to give you guys some information on how that works. So as always, if you have additional questions, you can reach out to me here at the WD office, shoot me an email, give me a call, and I hope you are doing well.